G'day folks, Jim here from Orchard Forex. It is Saturday the 25th of July. Well, the markets have just closed for the week with losses for both the stock markets and the US dollar. And looking ahead, it's going to be a pretty busy week again with both the currency and the stocks looking shaky, while the metals seem to be heading into outer space right now, breaking, or close to gold particularly close to breaking all-time highs. As we can see on the heat map, we're going to look at the charts in a minute, but the euro and sterling are looking increasingly positive. The Aussie and the Kiwi both maintain their strong uptrend. They did have a more consolidative session on Friday. Dollar Swiss is picking up speed to the downside, and dollar yen had a move, making a 4 or 5 month low on Friday, as we'll go and have a look in a minute. Stocks, well, the Nasdaq looks increasingly heavy, and that may pull the other markets down with it. This is a dollar index chart that looks heavy, so I think the dollar is going to remain under pressure. Gold, as I say, looks very, very well bid. Silver had a huge week, but I think it had the biggest weekly rise in almost 40 years. It's consolidating in the short-term charts, as we can see here, but I don't think the upswing is done with yet. Oil, probably leave alone. I kind of like oil, but if we are going to see a downturn in economic activity, there's no point getting too involved there, and the charts aren't really showing us anything. And on the crosses, it's all a little bit mixed, although euro yen does look as though it's going to outperform. If we go ahead and look at the calendar, the main event for the coming week on the calendar is going to be on Wednesday, when we get the FOMC meeting. And Jerome Powell will give his latest take on the economic disaster that's unfolding in the States. So here we have that, the Fed interest rate decision, and it's going to be a busy day as well. The other main event will be on Thursday, when we get the first take of the Q2 preliminary US GDP, and then on Friday we get the EU figures for the GDP. It's also going to be a very busy week on the reporting season. That's going to be in full swing. We've got Amazon, Google, Apple, Facebook, amongst many others, reporting their Q2 earnings. And to kick the week off today, we have the US durable goods orders and the Dallas manufacturing business index. So we'll go to the charts and have a look what is going on there, and we'll start off with the dollar index. Okay, so here we have a chart of the dollar index, and as you can see, it made it, so this is a weekly chart. It made its fourth consecutive weekly decline, and it's now back at levels that we last traded down to in sort of late 2018. The indicators are pointing increasingly lower, so I think we're probably going to test this 61.8% FIBO level, so 93.85, and that equates to a little bit over 117 euro, 117 against the dollar. And if we go through that, then there's not an awful lot. There's these lows back here, sort of early mid-2018 lows, but the next FIBO level is not down here till below 91.80 as it happens, and that's actually above 119 in the euro. I don't think we're going there yet, but certainly the indicators are pointing that way. So we'll go and look at the euro itself. So here we have a daily chart of the euro. We closed right on the high levels last seen way back here in 2018, and it looks to me as though we are going to test this 61.8% level of the fall from whenever that was, February 2018, and that 61.8 level that comes in at 118.20. As I said, there's resistance to be seen before that, particularly that FIBO level I just showed you in the dollar index. But also, if we go and look at the monthly Ichimoku chart, we're heading into the monthly cloud base, and that comes in at around 117.40. So I don't think we're going to go through there in a great hurry. I would be long, but I think I'd be lightening up at that level. I think we'll probably see some consolidation there. But ultimately, we could easily go up and test this 118 level, 118.80 level. That's the 100-month moving average. But it's going to take a while before we get there, and there are some levels before that, as I say. So if we go back to the dailies, I'd be buying dips on the day with a stop loss really below 116. We probably leave it below this 115.85 level, I think. There is still some bearish divergence on these daily charts, but the weekly indicators are pointing increasingly higher. We're also going to be coming into this descending trend resistance, which goes way back to 2007. It's a bit of a busy chart, this one. Let me blow it up. We've got various FIBO levels here. So 117.20. That's the 38.2% of this fall. That we then got a minor FIBO resistance, and there's this trend line which I'm looking at. That's around 117.85, and I don't think we're going through there, or call it 118. I don't think we're going through there first time round, but I do think we are likely to go up and test it at some stage. So as I say, I prefer to buy dips for the moment and leave a stop loss. Friday's low was what, 115.82, is that right? Yes, so probably leave a stop loss just below there. Looking forward to well, dollar. We're going to look at dollar yen because that made a move on Friday at long last. It's been doing this choppy consolidation. We had this major swing lower, and it got down to 115.80, 115.70 or so. But the daily indicators do look as though they might be picking up speed on the downside. The weekly's not really showing us a great deal yet, but I kind of think we may see some further downside. So I'd be looking to sell dollar yen into a rally at 106. If we saw 106.50, probably sell it there with a stop loss above this sort of high here, 106.60. If we go back and look at the 4-hour charts, I would probably keep my stop loss on short positions down somewhere above these lows here, around 116 or 106.60. So that would be that. The other currencies, well, sterling looks okay, but it's lagging because of Brexit talks. Dollar Swiss is beginning to accelerate to the downside. I kind of like that lower. The daily indicators are pointing towards further losses, but we have yet to take out this level at sort of 91.85 or so, and which is a major double bottom. So I think there's probably better trades than dollar Swiss. The Aussie, it's consolidating below the trend highs I've seen last Thursday, but the trend is still up. I do get a little bit worried about this bearish divergence in the Aussie dailies, and the situation in Victoria is not looking good. So if the COVID situation does deteriorate, I think the Aussie's going to run into headwinds. So I'd probably leave that alone at the moment. I think there's probably better trades. And the same really applies to the Kiwi. If we go forward though and look at the metals, okay, so here we have a weekly gold chart. Now this is the all-time high in gold back here in early 2011. We're just about there now. We've got $20 to go on the top side. I guess there's going to be huge resistance, but the charts are pointing higher. And if we do go through that 1920 level, well, I guess it's on the cards that we're going to have a look at 2000 just to see what's up there. So I prefer to buy dips. I wouldn't be buying it here at 1900. The 4-hour charts are a little overbought, so possibly showing a bit of short-term bearish divergence. But if you could buy it $20 lower, I think we're eventually going to take out that 1920, and who knows what's above there. Silver had a huge week, as I pointed out in last week's video. This is a monthly chart, and that's a 7-year channel that we broke out of, and silver had its biggest weekly rise in about 40 years, I believe. So I think the indicators are not showing us a lot, but they probably are tilting a little bit higher. Certainly the weeklies look pretty good, and having blown away this previous high here and here, we now, if we go and look at the monthly charts again, we've got this FIBO level just here, which is around 26.10, and that's going to be major resistance if and when we see it. But I do think we're going there. The monthlies may be picking up steam. The weeklies certainly look pretty positive, and the dailies also look very positive. So buying dips does seem to be the way to go. I don't think you're going to see it very much really under sort of 22.50 now, but it's probably worth putting in a bid in there and seeing what happens. We'll go and have a look at the stock markets. The Nasdaq's kind of leading the way here, and it's broken down through this. I mean, it's had an amazing rise, the Nasdaq. It's all-time highs, and it is broken down. It's broken below this rising trend, but we're still above the. We had this sell-off the previous week, and that's the 14th of July, and we're still above that level. So that may well hold, but the daily charts are seemingly pointing a bit lower. The weeklies are very overbought and maybe topping out. As I say, the RSIs are really running out of steam. So whether this is heralding a reversal or not remains to be seen. The S&P though looks that's still holding on to this support, and the charts look a little bit more neutral. Although once again, the RSI, the daily RSIs, are running out of steam. I think if I was going to be doing anything at the moment, I'd be looking to sell, but I'd have a fairly tight stop in place. If we do see a break of this 3,200, then I think we can probably head back to 3,100 really quite quickly. But wait and see what happens on Monday. As I say, we've got a lot of corporate earnings results due in the week ahead, and of course the Fed and the GDP figure on Thursday. A quick look at the Australian stock market, which really isn't doing an awful lot. We've been consolidating, probably underperforming a little bit over the last couple of weeks. So the daily charts are pretty neutral, not showing us an awful lot. Once again, though, the indicators do seem to be running out a bit of steam. The weekly charts, they still remain positive, and it may be we hang around here. The pink line, the 200-week moving average, with good resistance at the 100-week. Moving average. The monthlies not really doing a great deal, so I don't know. I think there's better things to trade in the Aussie stock market, and it may be that we just chop around, but possibly with a minor downside bias if the US stock indices do come off. Oil's not doing an awful lot. I'll just go to the oil market. It's just chopping around here. It's in this 40 to 42 range. For several weeks now, we've been below this major resistance area, which I keep on harping on about. If we are, I kind of like oil, but if we are going to see a major downturn in global activity, then oil's going to find it very hard to go up. The EU PMIs were released on Friday, and they were all better than expected, though. So maybe that's one positive sign that we can look to. The US PMIs did slightly underperform, slightly worse than expected. Nothing major, but I think oil is probably just going to continue to consolidate, and but we'll have to wait and see. And the US earnings season, that might bring about some activity, but I suspect 40 to 42 is going to contain it for a while now. Okay, so that's about it today. I think we'll leave it there, and if I've got any bright ideas of trade suggestions, I'll put out another video during the week. Cheers.